Here are the second quarter financial results for Southwest Airlines as presented by the SWAPA EFA IRC. During this COVID pandemic, SWAPA pilots accomplished over 153,000 departures, down 53% from last year, flew more than 6.9 million passengers, down 83% from last year, on an aircraft count of 737 aircraft. However, our active count was 626 aircraft, with 34 MAXs and 77 NGs in long-term storage. Our total revenue was $1 billion, down 83% from last year. Net income was a loss of $1.5 billion versus a profit of $741 million from last year, and earnings per share was a loss of $2.67 per share versus a profit of $1.37 last year. Second quarter unit level changes. Revenue per available seat mile was down 62%. Cost per available seat mile, excluding special items, fuel, and profit sharing, was up 77%, all based on capacity down 55%. Year to date, Southwest Airlines has accrued $0 in profit sharing for first quarter and second quarter. Also, return on invested capital, ROIC, has been suspended because management receives ROIC as not a meaningful measurement of financial performance during this environment. The first phase of the CARES Act is set to sunset September 30th, which guaranteed no furloughs. CEO Gary Kelly stated, "We do not intend to pursue furloughs and layoffs or pay and benefit cuts through the year." The CARES Act also suspended share repurchases and dividends till the end of third quarter 2021 and also placed limits on executive compensation through the end of first quarter 2022. Additionally, Southwest has until September 30th to decide to take the last of the CARES funding. Southwest currently has $14.5 billion in cash and short-term investments, plus the availability of another $1 billion in a revolver. The liquidity has come down since the beginning of COVID because, unlike our peers, we've paid off $3.7 billion in a 364-day loan and a $1 billion revolver. Our daily cash burn averaged $23 million a day. We started April at $30 million and came down to $16 million a day in June. The company's expectation is for July to be closer to $18 million. The company's core focus is returning to a break-even cash flow, which is heavily dependent on revenue generation, so demand trends bear watching. A question we often get is how much cash on hand should we watch for? From 2016 to 2019, Southwest Airlines averaged $3.5 billion in cash and short-term investments. In first quarter, we started to accumulate cash and ballooned to $14.5 billion today. Keep in mind, Southwest Airlines is the only airline with an investment grade rating, meaning we still have more borrowing room if needed. Bankruptcy is so far off the horizon, we can't even see it. This has been Captain Damien Jeanette with the SWAPA Economic Financial Analysis and Industry Research Committee and the Negotiating Committee.